Nifty and Sensex. The stock market experienced a positive shift from yesterday to today. Sensex rose to 71,555 from 71,072, and Nifty increased to 21,743 from 21,616. It's essential to consider various factors influencing the market, such as economic indicators, global events, and corporate performance, to make informed assessments of the market movement. Retail inflation eases. In a positive turn of events, retail inflation in India has eased, falling to 5.1% in January. This is excellent news for investors and the overall economy. The decline is attributed to lower food prices, providing relief to consumers. Analysts speculate that this drop in inflation may influence the Reserve Bank of India's policy decisions, potentially leading to lower interest rates in not-so-distant future to stimulate economic activity. Unemployment rate declines. On the employment front, urban unemployment in India has dropped to 6.5% in third quarter of financial year 23-24, indicating more people are finding jobs. This is expected to boost consumer spending and benefit sectors like retail and fast-moving consumer goods, contributing to overall economic growth. Cooking oil imports down. Shifting to the kitchen, India has imported 28% less cooking oil this year, potentially driven by higher global prices. This downward trend is anticipated to lead to lower edible oil prices domestically, providing relief to consumers and supporting domestic producers. Morgan Stanley Capital International Index Rejig. Finally, in the stock market, NMDC and PNB have been added to the Morgan Stanley Composite Global Standard Index, a widely tracked benchmark. This move could attract foreign investors to these stocks, potentially leading to an increase in their prices. Coal India shares surged 5% after strong third quarter performance. Shares of state-owned Coal India experienced a significant 5% jump today, following the company's robust performance in the December quarter. The reported rise in net profit has instilled confidence among investors, reflecting positively in the market. On the NSE, Coal India shares climbed 4.81%, reaching rupees 453.60 apiece. Hindalco Industries faces steepest fall in 4 years. In contrast, Hindalco Industries witnessed its sharpest fall in nearly 4 years, with shares declining over 13% on the NSE. The plunge is attributed to a considerable increase in capital expenditure and lower expected returns for a US-based project. This scenario has raised concerns about the company's earnings over the long term, causing its shares to hit their lowest level in 3 months. The ticker tape Fear Greed Index currently stands at 15.25, which is in extreme fear zone. This is taken as a contra-indicator where market tends to take support when in extreme fear zones and faces resistance when in extreme greed zones.